In recent news, two banks that catered mostly to the tech industry have failed, causing concerns for depositors about the safety of their money. Silicon Valley Bank in Santa Clara, California, and Signature Bank in New York were the second and third biggest bank failures in U.S. history. The failure of these banks was due to a bank run where too many depositors tried to withdraw their money at the same time, causing a chain reaction and making the banks fail. In response, regulators have guaranteed all deposits at the two banks and created a program to help shield other banks from a run on deposits. If you are a depositor in a bank insured by the Federal Deposit Insurance Corps, FDIC, then your money is safe, and you'll get your money back if the bank fails. Almost all banks are FDIC insured, and you can look for the FDIC logo at bank teller windows or the entrance to your bank branch. Credit unions are insured by the National Credit Union Administration. If you have more than $250,000 in an individual account at one bank, which most people don't, the amount over $250,000 is considered uninsured. Experts recommend moving the remainder of your money to a different financial institution in that case. If you have multiple individual accounts at the same bank, such as a savings account and a certificate of deposit, those are added together, and the total is insured up to $250,000. To tell if your bank may fail, you can watch the stock price of your bank, keep an eye on the quarterly and annual reports from your bank, and start a Google alert for your bank in case there are news stories about it. Pay close attention to the way your bank is behaving. If you have more than $250,000 in your bank, you can open a joint account with someone else, such as your spouse, to protect up to $500,000. Alternatively, you can move your money to other financial institutions and have up to $250,000 in each account, ensuring that your money is insured by the FDIC. Experts don't recommend withdrawing cash from your account, despite the recent uncertainty, as it is safer to keep your money in financial institutions, especially when the amount is insured. The FDIC has historically returned insured deposits within a few days of a bank closing and will either provide that amount in a new account at another insured bank or issue a check. If you have a joint account, the FDIC covers each individual up to $250,000. You can have both joint and single accounts at the same bank and be insured for each. Customers should take a close look at the types of investments they have in their bank to know how much of their assets are insured by the FDIC. The FDIC deposit insurance covers various types of accounts, but it doesn't cover stock investments, bond investments, mutual funds, life insurance policies, annuities, or municipal securities. Be sure to like and subscribe for more helpful financial tips and updates.